Alright, so how's it going tonight, guys? Right now it's about 11 p.m. It's still Friday. And I decided to stay in tonight because I'm just obsessed about XRP right now. This could literally be my play of the month. Either way, whether it's going to go up, whether it's going to go down, I think there's a very high probability of something happening very soon. And I'm going to explain to you guys why in high detail based on back testing as well. And I'm going to prove to you guys that there are many cases where we can prove that it's going to be bullish, right? I'm hoping that it's going to be bullish, but hope is never a strategy. We always want to back test things, and as a technical analyst, right, we see things in the chart that reflect the price action already. So based on history and based on trends in general, or just based on precedent, we can establish what could potentially happen. So what I'm going to do right now is I'm just going to leave the RSI on there, sure. Okay, I'll leave the RSI on here, and I'm going to show you guys, first of all, where this specific 3-day MACD is, okay? Whenever the MACD is about to cross over, especially to the positive side of the histogram, it's really drastic. Okay, it's a really big sign that says, hey, something could happen very soon, right? So as you can see right now, the day that we are on is this. Whoops. The day that we are on is September the 13th, and this actually closes. The next day is September the 16th, right? So we have tomorrow and the next day, so 2 more days for this candle to form, and then something could potentially happen. So once again, a 3-day candle is made up of a 3 one-day candles, okay? Makes sense? So once again, for example, in a 2-day candle, there are 2 one-day candles. Okay, that's gotta make sense. So once again, this one begins on September the 15th, or sorry, 16th. And I'm not shilling XRP. I don't work for XRP. I'm just 100% technical analyst, as you guys know already. And I'm sorry, I'm very distracted right now. I'm a 100% technical analyst, and everything that I see is reflected in the price action based on history, okay? So now let's take a look at what we have seen in the past before, and let's go over a backtesting method that you guys might not even know that I use. Okay, first of all, we're going to see how the price reacts whenever it is on the negative side, okay? Okay, so once again, this will be the first crossover. We have to remember this simple concept, right? I'm gonna write it down, just the basic things, okay? Actually, I'm too lazy to write it down right now. So we have to remember this and use this as one of the that is the fundamental reasons why we are testing, okay? So we see it on the positive side, yes? We see this on the positive side crossover. So red means that it's a negative crossover. As soon as we saw that crossover, basically, we can anticipate a crossover. So a lot of people were racking up shorts over here. As soon as this histogram didn't peak nearly as high, I bet you anything, this particular line that I am about to draw for you here is where people started entering shorts. That one there, and that one right there as well. So let's coincide it to where the heck that is. So we're talking about right here, right? And also right here. This is what a professional trader would do when they are looking at possible entries before for anticipation. We have to remember my main concept of lagging indicators, right? Because these are working on a moving average. This is what we call a lagging indicator because it takes a sample of the previous data and it gives a moving average, right? So it doesn't actually, it's not real time. Just give me a second, guys. I need a sip of this Pepsi. All right. So does that make sense? Histogram is not nearly as high. This one didn't even come close to crossing over, right? And then when people saw that, the red demarcates the crossover negatively, right? And that's where the downtrend started. And now, if we take a look at them, based on just that simple concept as well, is it also safe to assume the opposite as well, right? The opposite also holds true, where if this crossover over here ended up being, if this crossover over here started a downtrend, then this crossover down over here can start the uptrend. Does that make sense? So once again, think about it. If this crossover up there started the downtrend, then the crossover down here can start the uptrend, right? Both can hold true. Where if you reversed A and B, it's the same thing as if A then B, then B then A. Does that make sense? It's also like saying this as well, okay? If this crossover on down here starts the uptrend, then a crossover up there could start the downtrend, right? So just using very, very simple logic, going back and forth a little bit, okay? So now we've established that fundamental, okay? This is a very different kind of video than you guys are ever gonna get from me, man. And I don't share this stuff a lot, guys. I got a lot of, you can say, experience under my belt, and a lot of tricks that you guys don't know about that I'm simply just not going to talk about with the public. So now we're going to hunt on a 3-day chart based on this concept of it crossed over here and then it went down here, and then what happens next for the first crossover on that side. And we are going to go all the way back to when the downtrend happened. Like right here, this was too bullish to anticipate. Okay, if you tried shorting it over here, you would have been wrecked, to be honest, okay? Because we got to understand that it's a lagging indicator, like I mentioned. So this crossover here, even if you shorted a few bars below, this was a massive rally and a massive downtrend because it was so parabolic, right? That we just couldn't really catch it. You have to go on a lower time frame. Let me give you guys a few hints. Let's go to like a 12-hour chart, okay? Let's go to a... I'm getting very excited till I'm doing this, actually. Let's go to a 12-hour chart and take a look at this over here, okay? We're going to go way back. All right. So now, if you take a look here on 12-hour... Sorry for clicking a lot there. See this crossover over there? Well, this one you could have anticipated it, right? But you could have anticipated shorting it. But I personally wouldn't have. Actually, I would have shorted that right there. I've got to admit, 243, histogram started to tick down, anticipating a crossover, right? But I would have lost that trade. 100% I would have lost that trade. I'm not even going to deny it, okay? But my stop would have been so tight that I would have been like, wow, this one didn't quite cross over there. It's still going up and I got stopped out. Because this is a parabolic move up. There's a good chance that it's also going to be a parabolic move down, okay? So then I would assume that the next one, based on how how high my confidence was on the last short, because I got stopped out, therefore, if my confidence was that high and I was wrong, and now it's starting to show signs of bearish divergence, then the next short would most likely have a higher probability of succeeding, right? So think of it like this. Nothing runs up forever, okay? If let's say it's got like, you know, so many waves up already, it's parabolic, and then you take a short and you lose the short, you got stopped out for 1%, right? Every short you take after that, because of the parabolic nature of that coin, will have a higher probability of succeeding. Does that make sense? So then this crossover here was clearly the first one to the downside. We're going to go back to the 3-day. I'm just establishing some theories and basics for you guys, okay? So check this out. So here's here's the first one that crossed over, okay? And then it went to the negative side exactly as we projected, okay? Exactly as we projected. And then this is the first crossover, right? So here's the first one that made it go to the negative side. So that's where it crossed over up here. So it started the downtrend. And then now it's crossed over down here. So it started the uptrend. So just a little bit of you know, just to show you guys right here. That went up 120%, man. That's the crossover I'm talking about. So is there any difference right now than that one right here where it crossed over? First crossover, crosses over, and one right there. Is there any different than this one right here when you actually think about it and look? No, there's really not. Okay? And man, oh man, do I hope I am right about this, guys. Because right now, I'm ready to market execute. Okay? If this ends up rallying, I'm going to be a team player. Okay? You know what a team player does? They market execute, man. They just drive up and smash that wall. So imagine if okay, imagine there's no sellers. Okay? There's no sellers. You can stack it up at whatever price you want. If there's no one selling to you, you're not going to get it filled. Simple as that. I'd rather be a market executor with 1,000 other people that's just going to drive up the price and be a team player. That's kind of how I see the market. So now that we've established this basis, okay, of what happened there, we're going to try to prove another case, okay? Another case that could possibly hold true to what just happened, okay? We're gonna look for a case again on a 3-day chart where that was the only one so far. So this section was the first one. Oops. Right. So this section was the first one. Right there. Now we're gonna look for another. Here's another one right here. Okay. This whole area, right? This whole area right there. Okay. So here is where it crossed over, right? It crossed over up there, and then it started the downtrend right there. See that? And are we right? Yes, 100% we're right. Okay. And then now we're going to see what happens when it's down there and it crosses, or we're anticipating a crossover. What happened right there? Okay. Well, it would be pretty much this region right there where the crossover happened. And how high did that go? That went up 60%. All right. So case one is right here. The crossover happened there, and this one went up 115%. Case two, where it happened, it went up 60%. We have now proven for the past 2 years that every time we get a crossover up there, it starts the downtrend when it goes down here. And then we've also proven that every time there's a crossover from down here, there's something ridiculous that happens, right? And, it could have crossed over so many times there, right? Just another case, for example, right? Where it's hovering down here for a long time, right? And then we can also look at many different cases as well, where we're just going to not look for when it crosses up there, then it goes down. So we're anticipating it going back up, but we're going to eliminate this specific spot as well, okay? So let's say we eliminated this right here. We're like, forget it. We don't care about it when it's crossing over from up there first. We just care about when it's down here and it's about to cross over upwards. All right, so now let's argue that case as well. So we're going to say, well, the crossover, right there, right here, for example, right when it's about to cross over, right? It didn't actually cross over though, but it still ended up shooting up 30%, okay? That's anticipating the crossover. And then the next one would have been clearly right around here, okay? Right around there, where it's anticipation, we're anticipating it, right? The histogram's clearly going up, so we're anticipating it. How much did that go up? This one went up 20%, okay? Now, it didn't quite go up to the high side. So every time it crosses over, or is attempting to cross over, the bears actually end up rejecting them and pushing it back down, okay? So this one here, you couldn't really anticipate that bounce. Now, let's say we looked at this section right here as well, right? We're that right when the blue and the green, like when those two lines are fighting each other that close like that, and they have made that many attempts to break to the upside, well, look what happened here, guys. Bam, 200%. So you guys give me a reason why I shouldn't be bullish right now, based on just MACD alone. So yeah, I'm definitely bullish on it, guys. Like you look at any time of these where you're anticipating crossover, where it's just fighting on the negative side. Like this one, it didn't quite. It was negative, then it came down, right? This one just shot right up, and that was one of our other cases where it went up 60%. And look at all these other cases where I'm also mentioning these particular areas, okay? Like right around there, right? Where it's fighting. The blue and the white line are just fighting right now to bulls are trying to push it down there. It's trying to keep that average there on the negative side, and then it ends up just skyrocketing a 60% there as well. Boom, as soon as it crosses over. So right now, I'm just gonna do this straight up, guys. Like I'm gonna take a Fibonacci retracement. Actually, my where was it again? My target My target was something like 29 cents, like if we break to the upside. So guys, this the quick summary of this video is that I'm obviously bullish on it, but I don't know as much as you don't know. These are just my ways of arguing in my own head which way it has more of a probability to lean towards to, right? Is it left? Is it right? Is it up? Is it down? Right? So I'm just trying to let you guys inside of my head a little bit, and I'm gonna push out like some pretty cool content for you guys, let you learn a little bit more about some of the stuff that I know, maybe, you know, keep it a little bit more interesting as well. So yeah, I just wanted to show you guys how I do a MACD and histogram analysis. And this is, and you know, I've got many different ways to correlate that to RSI as well. But based on how it stands, I'm really hoping that it breaks upwards. But once again, hope's not a strategy, right? You guys got to make sure that you understand as well on the bearish side that we do possibly have a descending type of triangle. But man, oh man, is it really a descending triangle, or is it just ridiculous support? You guys tell me. Is it a descending triangle, or is it legitimately ridiculous support? Because you gotta admit, this whole section right here, man, is just a congestion right now of support. And I'll be darned if we break through it that easily right now, okay? But I wouldn't be surprised. Therefore, despite this being a bullish XRP video, you have to understand that I'm very, very neutral in my head, right? I don't act on emotion, not based on what I want. I react based on what I see and based off of how the market shows itself, right? It's going to show its true colors very soon based off of level 2, based off of price action, just based off of like the market order books as well. And it's going to be cool. Like, take a look at the order book, level 2 especially. It's going to show a lot. Eventually, I'm gonna be looking at walls. I'm gonna look at it on multiple different sites, right? And let's just see who's got walls where, and what kind of buyers are stepping into play, right? So it's gonna be a very, very interesting next few 2 days at most, guys. Like, it's edge of your seat action. So I can do this, okay? I can go out. I can, you know, do whatever with my friends. You know, just spend the night away or whatever, right? Or I can sit my ass at home and hopefully make $5,000 in the next few days. Simple as that. So I'm gonna be here and I'm gonna keep you guys updated one way or the other, and I hope that you understand the purpose of this video. Okay, the purpose of this video is to teach you how to do a backtesting method with histogram and MACD, and also how to show you that you will never act on hope and never act based on what you want. Only act based on what you see and how the market ends up moving when it shows its true colors, and more indication of a trend is shown. So anyways, have a great night. I hope that you enjoyed this video. A little bit different than what you're used to, I bet, right? Take care.